Let's take a look at all things money matters. The JSE All Share Index is up following 2 consecutive sessions of losses, tracking an upbeat mood in Asian markets after China cut a key lending benchmark by a larger than expected margin to support a slowing economy. Lesedi Mabuza of Sentio Capital, she's an equity analyst there, joins us to talk to us about the latest market moves. A very happy Friday to you, Lesedi. Always good to see you. Is it a happy Friday on the market front?
I would say today is a much better Friday. Well, greener Friday today. You have the J All Share doing much better, up about 0.3%, as well as your top 40 index also doing well, up about 0.2%. And the sectors behind these gains are mainly from your resource sectors, mainly, or i.e. your metal mining, resource sectors, as well as your big index players, Naspers and Prosus. And the reason for them contributing towards the gains is due to the China policy support that you mentioned earlier. So China reduced their 5-year loan prime rate by about 15 bips to 4.5%. And this is the biggest reduction that China has done since 2019 when they revamped their interest rates. And also as well, this was a bigger cut than what the market had expected. But looking from the reaction, it is looking like China is looking to recover and also support the economy after the hectic lockdowns that they've been experiencing in big manufacturing areas, especially Shanghai and the capital in Beijing. So this is a positive sign for China, showing that they are trying to improve the economy. And it is positive for us as well as Africa, because this will keep commodity prices up and is good for our miners here locally.
On that note of positivity, can we expect it from here? S&P Global and Fitch Ratings are scheduled to publish a rating review of South Africa later tonight.
Yes, so looking at what Moody's did a month ago, so they came out and they kept their rating affirmed, and they maintained their outlook at stable. So, and that was mainly due to higher commodity prices, which means we are being supported very well, especially supporting our fiscal here in government. So looking at Fitch Ratings, I do expect them to affirm their credit rating and maintain a stable outlook for South Africa. And then for S&P Global, I also expect them to affirm their credit rating, but probably change their outlook from negative to stable, seeing as that we are still being supported by higher commodity prices.
Talk us through the service offering of Richmond. They have published their results for the year ending 31 March 2022.
So the group released their full-year results today for the year end, and just looking at the results, they are pretty strong, pretty well. I mean, you had sales up about 46%. Your operating profit margin or operating profit was up 129%, and your operating profit margins are at 17.7%, and this is very well compared to 11% last year, even though they did miss market estimates. And just looking at the share price, currently it is down today, and this is mainly on outlooks. This is mainly on outlooks on what management commented. So due to China being a material division in part of their operations, currently China is going through the hectic lockdown, so they are being impacted in terms of trading on that. And this isn't good for them in terms of overall. So the market isn't taking that well in terms of the outlook going forward.
The Foschini Group also published their trading statement. How do you characterize their results?
I would say that overall the results are really good. So they released a quarter four trading update. Group retail results are up about 23%, which is really positive. And this is continuing momentum from their past results, especially in the interims. You're showing good results across the sectors, and they did guide that they are expecting high double-digit growth in all divisions, which is positive. They also released a guidance for 12-year sales updates, which they expect to be up about 36%. They also guided for headline earnings per share to be up by a ridiculous number, which is like over 400%. And overall, the results are really good. This is positive for South Africa and for us. It shows that the economy is recovering. People are going back to work. People are buying clothes, going to events. So this is a positive sign for the South African economy in terms of our recovery.
Lesedi Mabuza of Sentio Capital. She's an equity analyst there and talking us through the latest market moves. Thank you very much for availing yourself this afternoon.